Good morning, ladies and gentlemen. Welcome to Equalifi's second Indian Fund Admin Innovation Summit 2024, presented by KFin Technologies. We're thrilled to see so many distinguished leaders from the AIF and fund admin community here with us today. Allow me to introduce myself. My name is Namrata Baluni, and I'm delighted to be your host for today. Over the years, Equalifi, formerly known as AIWMI, has established itself as a pioneering membership community within the financial services sector. It serves as a unifying platform that unites individuals and organizations, serving as a nexus for facilitating collaboration, knowledge exchange, and professional development. Equalifi has been instrumental in nurturing a strong sense of community and shared goals. Members benefit from a collective platform that offers networking, opportunities, keeps them abreast about industry trends, and supports continuous learning through workshops, seminars, and conferences. Moreover, Equalifi advocates for industry standards, ethics, and regulatory frameworks, presenting a unified voice capable of influencing policy decisions. Today's summit, presented by KFin Technologies, is a testament to the culmination of an initiative that began as a knowledge conference but has evolved into a movement significantly shaping India's asset servicing industry. The Indian Fund Admin Innovation Summit is an unparalleled opportunity for us to share insights, discuss emerging trends, and explore innovative solutions to the challenges we face in the industry. And now would be the perfect time for me to invite all of you to join us in taking the conversation happening on this stage and in this room onto your social media platforms. So please share your key learnings, share your insights and thoughts and your takeaways within the community, outside this room. And when you do that, please tag us at Equalifi and at KFin Technologies. All right, so without further ado, let's begin. We have a keynote address by a visionary leader, a stalwart of the mutual fund industry. He brings with him over 3 decades of rich experience in the mutual fund industry as a portfolio manager, both in fixed income and equities. He has been associated with the Aditya Birla Sun Life Mutual Fund and the group since 1994. Prior to assuming the role of the CFO in 2009, Mr. Balasubramanian served as a chief investment officer. In addition to his numerous awards, he has also been a member of the board of Association of Mutual Funds in India since 2009, serving both as vice chairman and chairman during his tenure. So ladies and gentlemen, please put your hands together for Mr. Balasubramanian, MD and CEO of Aditya Birla Sun Life Mutual Fund.
Good morning, everyone. First of all, thanks to Mr. Nadella and Sridhar and other members of the association to invite me to be the keynote speaker. Of course, I've been part of the MF industry for long. More than 30 years I've spent in the Indian mutual industry. I've seen it evolving over a period of time. And this conference is more on the alternate business. I'm sure the timing of the conference, it's so perfect. Now everybody talks about alternate investment as one of the big opportunity. So I'll just give you a sense of why it's the right time. I think from an economy point of view, I call it as a simple word, all cylinders are firing. When I say all cylinders are firing from economy point of view, you take any segment of the market, any macroeconomic variables, if you look at it, I think all of them are progressing quite well. Right from GDP number, probably at this point of time, most of the estimate that's coming from the learned economist, the numbers are lower than what the actual outcome is coming. So basically, even the economic growth is beating the expectation of economists. It's like analyst community predicts results, and the results has been outperforming the analyst expectations, not just in India, even worldwide. And GDP is also more or less the similar line is coming. So the GDP numbers have been progressing quite well. I think inflation numbers largely under control. The interest rates have remained stable and will continue to remain stable for even for a prolonged period. So normally we say that in bond market terminology, the higher the interest rates will stay for longer. So higher means is about 7% is higher, which is not very big actually in terms of the rates being really high. So therefore, cost of borrowing for Indian companies have become the most affordable. Cost of capital also has come down significantly for companies to look for a higher ROE. As it stands today, the corporate balance sheets are extremely in a comfortable position with less leverage. Nobody generally talks about it. If I take Nifty, the leverage ratio has been one of the lowest. And from a government finance point of view also, I think we are in a good period. I think overall fiscal deficit also, if you look at, I think we are in a sweet spot. After the next few weeks, we have the budget to expect, and there is high probability and they may give more money in the hands of people to improve the consumptions as the next round of growth. That's why I call it as all cylinders are firing from the economy. And whatever theme which has been put out as an economy, I think all of us hear about Make in India and Digital India. I think each one of them actually have progressed so well, and now the question would be how it gets scaled up very fast. That's I think will be the question mark. And last but not the least is mutual fund industries also have been having a great time. And today, often I used to tell people, being part of the industry for long, and we used to have a time, and Sridhar used to be part of Unit Trust of India. We used to do a hard sell about mutual fund. Selling a concept of mutual fund was one of the big tasks for us, and making people understand the benefits of investing in equity schemes, the benefits of investing in fixed income schemes was the biggest taller task. At the same time, things were evolving. I mean, when I still remember the early days when we used to use Lotus 123 as part of our technology platform. That is the only technology platform we used to use. Some of the veterans of technology industries here, and we used to sit in the Excel file, not in Excel file, Lotus 123 file, and arrive at bond market valuations. And we used to have a struggle in terms of how do you value a bond. And it all got evolved over a period of time. And today, when you look back the scenario in which we were living in, and you look at today on the mutual fund industry, it has become a well-oiled engine, which has been the biggest success. And the turnaround point, which came, of course, for MF industries, two. One, the demon. When the demon happened, then naturally the financial asset classes gained more importance than the physical asset class like real estate. Nobody generally talks about it, but my own belief is the first turning point came when the demon came. That's the time the discussion about financial asset class started happening more rigorously in the mind of investors. Then came actually the mutual fund Sai when we created for the mutual fund industry. That really has become very powerful brand in the country, and that has done wonders for mutual fund industry to take it to where we are today. It's helped in expanding the market. And over a period of time, the mutual fund as a brand has been taken over by the SIP way of investing. So today, whenever I do a conference and meet with the people and ask the crowd that how many of invested in mutual funds, very less number of hands used to go up. The moment you reverse the question and saying how many of invested in SIP, more number of hands will rise, which essentially means that people also understood the power of SIP way of investing. That's the way today Indian mutual fund industry have become one of the large counterforce for foreign institutional investors in India. Is something as a big achievement that Indian financial service industry has done, and mutual fund industry have done great work in that. And as it stands today, mutual fund industry space about 20% of the banking industry size. My own belief is it will become 40 to 50% of the banking industry size over a period of time. So therefore, mutual fund industry is actually it's done such a great work to create awareness about financial services industry, awareness about investing in the capital market. I think huge acceptance that has come in the mind of investors about investing as an equity. Equity cult in India was always the lowest, which all of us know, and today equity cult has gone up so much. Now we have to worry about whether they has gone so much that people will start misusing the market instrument for them to lose money. So that's also now a different kind of worry is there. But the fact of the matter is awareness have gone up quite significantly. Second, of course, the wealth effect. I think wealth effect in India has gone up quite substantially on the various initiative which has been taken by the government in the last say 10 years. A significant amount of wealth got added other than major cities like Mumbai, Delhi and major top cities. And when we even coined the word B15 cities and B30 cities in mutual fund industry, initially a lot of us in the industry used to have reservation in terms of why should we spend too much of money in going to the smaller towns, mid-sized towns and help in the industry to expand. And today everyone is targeting the mid-sized town, not because of anything else, because of the wealth effect has gone up. The other thing which has also happened, I think post-demand has happened, but it might will continue to happen even today. The assets are getting monetized. I think if you look at more deep dive into the net worth of every individual in the country, the assets which are physical assets or assets which has like land or houses, today they also have become reasonably tradable asset class. Not that it gets traded, but it can get sold. I think it can be monetized where the price levels have gone up thanks to the expansion coming from Make in India, expansion in terms of spiritual tourism, which has picked up quite significantly. And then around the surrounding places have seen a significant value rise. So that's something I'm seeing in terms of land prices going up and the government expanding in the infrastructure, especially road infrastructure. Government have been acquiring lands, therefore giving more money in the hands of people who have been owners of the land, and suddenly the wealth effect has gone up quite significantly. Recently I was in Pandharpur about a few weeks back. I just want to give you this anecdote. So when I went there, I could see the Pandharpur temple getting rebuilt the way Amritsar has been built. Within say 1 acres of land it is there, now getting expanded to say 5 acres of land, the whole temple premise is coming. Just imagine once this becomes actually one of the major tourist destinations, say within Maharashtra, even for the whole country, the in and around places suddenly starts prospering. And that's I think has happened in most of the places where the real estate prices have shot up. What does it mean for money managers' point of view? For the wealth manager, for money managers' point of view, the sudden wealth effect that is now from a physical assets to become a monetizable assets, it becomes actually comes in your bank account in the form of from the cash balance. Then naturally the wealth effect starts reflecting, the demand for financial service products goes up. So therefore, my own belief is we will see a significant pickup coming for the financial asset class, and mutual fund industry will continue to become larger. And alternate investments, given the fact that equity cult in general has been going up quite significantly, and people have been venturing into buying into the equity as an asset class the last few years, has also coming from the fact that you look at any period of market or the mutual funds, you take 5 years, 10 years, 15 years, 20 years, 30 years period, I don't think any investor would feel that I have lost money. I think the returns have been, maybe they could be lower to the extent compared, when you do a comparison, you will always feel you got lower return. But the experience of investors have been so good, that naturally boosts the confidence of people to take plunge into investing in other asset classes. That's why I feel the alternate investment business, we are at the stage of takeoff. The way we saw in 2016, 2017, the mutual fund was at the stage to take off. I think alternate investment business, I think we are at the stage for it to take off. Whatever the size currently is today, my own belief is it can become about 4 or 5 times in the next 4 or 5 years. I think that's something which is coming. Second is number of players. I think competition. Competition, of course, So when I started, it was 3 mutual funds we are competing, and we used to take pride. Sam number 1, number 2, number 3. And there are 3 players. Anyway, out of 3, one will be number 1, only number 2, one will be number 3. So that's what we all used to, and we used to compete with the Unit Trust of India. So how do we come closer to Unit Trust? That used to be our benchmark, the goal. Our goal was how to actually get closer to Unit Trust of India. So when I was in JSC Mutual Fund, we used to think actually we should actually come closer to Can Bank Mutual Funds. Those days I'm saying. So now the whole landscape has changed. The more the competition, I think is the more the expansion happenings. And somebody who is coming in today, for him actually growing the assets is much easier than somebody would have maybe done in the last 30 years. I think it becomes easy to sell. So my own belief is with the regulatory framework is also changing more in terms of inviting more and more people to actually participate in the growing wealth management business in the country by way of giving more license to mutual funds and giving more license to private managers in the alternate business and PMS. And that my own belief is number of players will only rise. So my gut feeling is in the mutual fund industry space, you will have almost about 100 players coming in the next few years. I think you will see more and more people, even people who are left India, they will come back. Because now they will see regulatory environment is now much better, operating environment has got better, and the disclosure norms are much better, transfer levels are much better. Therefore, the probability of making a risk, which will have an impact on a reputation, also has gone down so much. Therefore, the people who are left India also could come back. Therefore, more and more players will come back to India. So that's something as far as the mutual fund I see. As an add-on effect of this, my own belief is you will find more players coming into the, like money managers who have spent good number of years, now they are venturing into setting up their own AIF and PMS. But at the end of the day, most of the investors, as the asset size starts growing, and not only they become richer, they will also like to manage their money on their own. So that's why the family office's general approach is they will manage money on their own by themselves. They will also engage money managers and advisors as to add on, and they will also invest in mutual fund. They will of course use all the service that is available for them to actually manage their money. Therefore, there will be more and more players will find this alternate investment business to become, because the cost of capital is less. Even I was part of one of the committee which was set up by SEBI to look at the capital investment that is needed for setting up a mutual fund. For the capital investment needed needed for setting up a digital AMC. That there was a time where even we used to discuss about should you not have only 10 crores capital if somebody just runs a simple product with no complication like index funds. To the extent even regulatory environment is actually looking at creating enabling environment for more players to come in. Therefore, my own belief is you will find more players coming in, and that's something will happen. I think in this growing things, I think most needed is fund administration services. I think I still remember Carvi used to be our one of our initial service provider, and Carvi, then CAMS came in 2004, and see how CAMS have grown in size and become a large the fund administration service industry. And K Fintech, K Carvi was the inventor of the whole fund administration services in the early days, and that I think will become increasingly important, the whole piece. I think the more players coming in, you all can manage, individual can manage it up to an extent only to up to certain period. But the moment you start getting a scale, your number of customer base increases, and the number of ownership and accountability, which will also come on the fund managers, like valuation of securities. That's something I've seen, whether it is private equity, whether it is publicly listed equity, whether it is publicly listed debt market instruments. And all these instruments, when you look at the complexity that is involved on each of these financial instruments, will only go up. It's not that it's not going to get reduced. I think complication and complexity will increase, and the onus on money managers to follow certain prudent norms, to have an external valuation being applied in order to be fair to all the investors. Therefore, all these things initially everyone will say, no, I'll do it in-house and so on and so forth. I think over a period of time, I think the external service providers will start playing a role, but they are the one who will bring the common uniform principle that's being applied for the whole industry into a single platform. Therefore, that knowledge resides with the fund administration service provider, will actually benefit the whole ecosystem. So I think that's where it will begin. It's not about the monopoly, it's not about who has what market share, it's about how you can utilize the services that is being provided with fund administration services. That will happen. The way I think I'll also be not surprised, of course, Nadella has come from US. I think one of the beautiful model which US of course has got is the fund administrators also acts as a custodian. They become actually the holistic service provider. I'll not be even surprised as moving forward, as the industries has become larger, when the sales starts coming in, then naturally the administrative service providers would also become a holistic service providers for a period of time. And that's something, and also my own belief is, of course, here is being done in the form of a DP, but that also will happen. That's something will become a critical the link for the business as well. And last but not the least is about technology. I think the investment in technology, of course, goes without saying. The investment in technology will make it more easier. Therefore, from a customer point of view, how the expectation of our customers can be met on the services. Today, the alternate business, and whether it is the PMS business, the AF business, I think as is in the beginning of stage, service will become relatively easier because we'll have a few number of clients. As the customer base starts increasing, there will be a lot of onus and the responsibility which will come on both the service provider as well as product provider to bring the technology adaptation to ensure that customer expectations are being met. I think that's something which will come. I think largely, if you look at the roadmap, I think clearly we are at a stage, we are not only actually marching towards the higher economic growth rates and marching towards $10 trillion kind of economy. I think the wealth effect that is coming in the market, I think will also keep rising quite significantly. Therefore, the providing greater opportunity for financial service providers and especially the capital market service providers, and within that alternate investment business and PMS business, I think will become a significantly a large portion of the industry. And lastly is the product innovations. I think we have seen a continuous evaluation happening on the product innovations. I still remember the discussion that we used to have and read in InvIT. We were the first fund house to invest in InvIT, and in fact we enabled investment what do you call the regulatory changes that was required for investing in InvIT when it was introduced, when Arun Jaitley was the finance minister in 2018 and 2019, and we didn't make money. Actually, we lost money being an early entrant, and we lost money in that instrument. But as time progressed, today InvIT and REIT is also becoming one of the bigger asset classes. Therefore, I would also assume as we move forward, the product innovations today, which is in the public listed equity, which is the dominant component of the asset class, we will also see the privately held and private equity will also become one of the large component as your startup culture in India is becoming bigger. You will see that happening. You will find the new instruments which are more fixed income kind of oriented investment like REIT and InvIT also will become the larger component as time progresses. And another big area which the government of India also will do, which is the asset monetization. Asset monetization which the government of India also will do, which once again means that more and more InvIT kind of instruments will come. Therefore, this product offering will only keep rising as far as the AF concerns, and that's something will make it more interesting for the industry to become the larger way of new product offering. Therefore, it is important for the fund administrations, the role will only keep rising. I think today it may be remaining small. I will not be surprised the entire alternate business from the mutual fund point of view will of course become one of the component of mutual fund industry, and given the fact the larger franchise of mutual fund is actually the more retail mutual fund product. So whenever the large mutual fund players, when you look at, they will always take a measured call when it comes to the question of offering alternate product, whereas the people who do not have association in mutual funds, but they are running it as a single entity only on the AF, probably they will be actually be able to grow even faster, given the fact they don't have to worry about the larger franchises in which they are working on. Their franchise will be small, a boutique, but at the same time, it can actually more players are coming in. This is why I think the industry will grow. So it's the right time for a detailed discussion on this. I'm glad that we are having this session today with industry veterans coming and speaking in front of all of you, discussing about the way forward, and wish the conference the best of luck. And let us also hope the industry become larger and larger the alternate space as it has happened in the case of mutual fund industry space. And thank you for the opportunity.
Thank you, Mr. Balasubramanian, for that insightful and inspiring talk. Your vast experience and visionary leadership in the mutual fund industry have truly enlightened us today. Ladies and gentlemen, let's give another huge round of applause for Mr. Balasubramanian. Now, moving on, you have an exciting video presentation from our partners, Keynote Technologies. This video will give us an insight into their innovative contributions to the fund administration sector. Let's have a look.
Investments and businesses drive economic activities that shape a country's financial ecosystem. In the last 3 decades, Keynote has become an integral part of the same financial services ecosystem. Keynote is an industry leader in fund administration, offering comprehensive solutions catering to all types of asset managers, including mutual funds, alternative investment funds, pension funds, insurance, portfolio management services, and wealth managers. Our geographical presence extends across India, Malaysia, Hong Kong, Singapore, the Philippines, Thailand, the Middle East, and Canada, making us a global fund administrator. Keynote manages nearly 26 crore investor folios while processing 18 lakh transactions daily across multiple asset classes. We are servicing 25 domestic mutual funds, over 470 alternative investment funds, 50 plus global funds, and more than 20 gift city funds. Alternative asset managers are challenged by market penetration, digital transformation, and technological adaptation. We solve these challenges by providing innovative, end-to-end fund administration services for alternatives, including transfer agency and investor servicing with customizable statements and adaptable workflows, daily AML checks, and enhanced security through encryption and tokenization. Investment management and fund accounting services covering front, mid, and back office operations. Affiliate portals and dashboards catering to investors, distributors, and asset managers. Digital onboarding platforms offering seamless automation, configurable workflows, e-signing, and insightful analytics. Advanced fund analytics encompassing portfolio analysis, risk assessment, performance benchmarking, and compliance tracking, and compliance services including AML, KYC, risk profiling, and regulatory adherence. Keynote X Alt is India's first homegrown fund administration platform for AIFs with a range of distinctive features like multi-asset class support, multi-currency capabilities, multi-geography reach, multilingual interfaces, and an omni-channel solution to provide 360-degree asset and wealth management services. When bundled with Empower, our in-house fund accounting platform, XAlt covers the entire spectrum of fund administration. Empower's automation capabilities streamline valuations and income recognition based on market practice, chosen policies, and IFRS with fully supported regional variants. Apart from operational reports, statutory reporting for selected countries is also pre-packaged with Empower. Embrace automation and power your asset management with Keynote.
Now that was an insightful presentation from Keynote Technologies.